Hello, I'm Hansley from Livewire Markets and welcome to The Pitch. Joining me today, Clinton Arentz from Trilogy Funds. Clinton, let's talk about the opportunity for industrial property that's going to come out over the next 5 years. And if I think of just the different choices that are now available to everyday investors, so from where you sit, what do you think is the single biggest reason that investors should consider allocating a portion of their portfolio to industrial property?
Well, I'd argue it's probably one of the most dynamic asset classes in Australia at the moment. I mean, one thing that comes to mind is the regional growth. These companies are expanding across the country, getting closer to their customers and expanding into major regional growth areas, which is to some extent a COVID function as well. So it's the asset class to get into in that sense if you want that sort of national growth perspective.
I'm curious, actually, because if you're bringing up regional growth, I mean, is it covering all states or all different manners of cities and towns?
It's quite extraordinary. I've got the luxury to be able to travel around the country to look at these premises, and we've got assets in Darwin, in central Queensland, in Brisbane, in Melbourne, in South Australia. Everywhere I see is high demand for more premises from certain sorts of tenant groups, but also a preparedness to go to the regions, A, where they can get workers, and B, where the population centres are growing.
Yeah, that's fantastic to hear, and it's fantastic for the economy, of course, as well. So as is with any property, you've already alluded to this, two things are crucial: the quality of the tenant and the location. So what metrics do you use to find a good quality location, I guess just as importantly, a good quality tenant?
Well, they tend to operate in clusters, so companies will want to work together in certain types of industries. Central New South Wales, for example, in around Western Newcastle is a good example. There's a whole cluster of quite smart industrial companies there, some of them working in mining services, but we've tapped into that market too quite significantly. So almost in every state there's these high regional growth areas, there's major new road networks, there's new hospitals, there's tremendous amount of growth, all of which needs industrial premises support.
Okay, so how do you as an investment manager actually seek out that capital growth?
Well, we look for these areas that we think have growth ahead of them. We also look for areas that aren't glutted with land, for example, and that's nowhere at the moment is glutted with land. So it becomes increasingly harder to find these assets. But we look in these regional growth areas, as I say, and we look for assets that have been perhaps overlooked to some extent. Might be a bit out of favour for whatever reason. They're not as fashionable or funky as major CBD assets. They're not necessarily investors' minds, but they certainly perform well because the underlying company is a strong, long-term, good performing company with strong financials. Typically that's what we look for. Okay,
excellent. So one thing I'm curious about, obviously, warehouses and industrial property, the first thing that maybe comes to mind is that you need a lot of space. But I'm curious, does size matter when it comes to a portfolio of properties like this, and maybe in turn, is bigger necessarily better?
Well, to a point, size matters a lot if you want diversification. So to achieve diversification, you need a certain scale. We've scaled up to 15 properties now, or $250 million assets under management, and we're getting that economies of scale now in terms of our management costs. We're also getting the diversity we wanted, and we're getting a nice spread of income streams from a range of different industry sources. Yeah.
So bigger is not always better?
Well, at some point you don't buy for the sake of it, but we buy selectively to add value to the trust. And we're always looking to maintain the running return of the trust, or always looking to grow that where we can. So that's very, very key part of our decision-making criteria.
All right, so you've spoken to that asset selection. Let's talk about how you actually invest and how that kind of manifests in practice. Tell us about an asset that you have invested in that signifies the opportunity that exists in the industrial property space today.
Look, there's a range I could think of, a range of examples, but one good one is in central New South Wales, in behind Newcastle. There's a manufacturing group that were refurbishing old trucks for the mining industry, but they now run an operation where they convert those trucks to electric operations. So, and they've now brought on a whole bunch of new customers that all want their diesel trucks converted to electric trucks. So this is a high growth industry that's got a lot of potential ahead of it. And that's just one example of quite a sophisticated business operating in our fairly simple industrial warehouse type premises.
And as more customers come in, they need more land, they need more demand.
Absolutely, yeah, the demand pattern is very strong at the moment and will continue to be so for the foreseeable future in our estimation.
All right, fantastic. Clinton, thank you very much for joining us. And thank you for joining us for The Pitch. If you enjoyed that conversation, you can subscribe to the Livewire Market Index websites as well as our YouTube channel. Thanks for watching.